Well, given the fast fall that we had at the start of this year, we saw the S&P go into correction territory, the NASDAQ down almost 18%, crypto getting killed, small caps getting killed, a lot of damage being done under the surface. It's not unusual to see a bit of a bounce after a move like that. That being said, I'm not so sure we're completely out of the water yet. I think the market's recalibrating valuation, recalibrating what growth's going to look like, and how the Fed's impact is going to be on all of that. So I think we're still in this uncertain phase, but I think investors are taking a little bit of a breather here, taking things in stride and realizing maybe the risk-off tone occurred a little bit too quickly, and it's time to just pause for a minute.
Well, let's get to a stock that is under a lot of pressure today, in addition to Meta. That would be Alibaba. Deirdre Bosa's got the story. Deirdre.
Reports that SoftBank may be getting ready to unload part of its massive stake. The Japanese conglomerate currently owns about 25% of Baba, reporting tomorrow morning. And that will give us a read on how the Vision Fund and other investments are faring amid the sell-off in high-growth tech stocks and Chinese names. Masa-san and his team have positions in both spaces, and selling some Baba could help recoup recent losses there. SoftBank shares in Tokyo are off about 50% from its 52-week high. Guys?
Deirdre, thank you. Lindsey, how do you think about big declines like this? I mean, even if it's not specifically Alibaba, in terms of portfolios, big technology portfolios feeling pressure from the most recent downdraft, being forced to sell some of their holdings?
Yeah, I mean, it's why we, to our retail investors, we're constantly pounding the idea of diversification, right? Because if you have a big stock like this, it's a big component of your portfolio, you're going to get hurt and it's not going to feel very good. So diversification is key. But what I do find interesting is that some of these bigger tech names that have had reliable earnings and reliable margin strength over the course of the past several years, and the pandemic kind of changed their growth trajectory, their valuations are coming in. So I think in some ways you can look at some of these stocks and consider nibbling at some of them. I wouldn't put all your money in them, but I do think as there could be further to grow while the market still contends with what the Fed's doing with interest rates. But I do think some of these names are starting to look interesting where they're at.